For decades, banks have competed on the same core products: accounts, loans, cards. But if you step back for a moment, those things are increasingly table stakes. Customers just expect them to work, but they rarely choose a bank because of them. So the real question becomes, what else can a bank do that actually matters in the customer's life? We're starting to see a shift towards what's often called value-added services, capabilities that sit around the traditional balance sheet and help customers solve real problems. But that raises a bigger challenge for banks, deciding which problems they should solve and which ones, well, they require partners. Today, we're going to explore that idea through a very specific lens: how banks have moved beyond products to outcomes that show up in everyday lives of customers. Joining me are Drew Reilly from US Bank and Marcy Allen from Carefull, a company focused on helping families protect aging loved ones from financial risk and fraud. Disclosure: Alloy Labs is partnered with Carefull, and we're an investor via our Alchemist fund. And as someone that uses this to manage my parents' finances, my enthusiasm for Carefull is, well, based on experience. Together, we'll talk about how banks think about value-based accounts and loans, what it takes to deliver those services inside a large institution, and what happens when financial services start showing up in places customers actually need help, not just where banks traditionally operate. This is part of the Hot Take series powered by US Bank that was recorded live at the University of Utah's Fintech Exchange Conference. Well, welcome to the Breaking Banks Hot Takes, brought to you by US Bank, the Fintech Exchange, our second year recording here. And you guys drew the short straw first thing in the morning, so I hope everyone is caffeinated, but it is actually a topic I'm very passionate about. Excited to have Drew Reilly, who's on the Fintech team at US Bank, and Marcy Allen, who leads enterprise financial institutions for Carefull. Disclosure: Alloy Labs is an investor in Carefull, and we're an early partner. And I should also disclose, I am a Carefull power. Did you even know that, Marcy? I am like, my father hates Carefull, my mother loves Carefull. Maybe we'll talk a little bit more.
We could definitely talk about that.
But the theme I wanted to pull on, and Drew, I want to start with you on this, is, banks love to talk about how they compete, and they talk about, they think about products, and the world is around loans and deposits. But that is not the field of competition anymore. And US Bank has been leaning into this for a while. It's the reason your team exists and how you think about it. What is the new field of competition?
That's a great question. Also, thanks for having us here, Jason. I know it's 8 a.m. and I just appreciate that there's not hot sauce out for us to handle this time.
That can be arranged.
I saw the hot take sign go up, and so I got worried.
If we could do that in the coffee, that might be a powerful way to start.
8 a.m. or hot sauce. But back to the question. Yeah, I think it's no secret that the landscape of competition in banking has been changing. And I think any industry that's been around for hundreds or thousands of years, right? Eventually, you're moving slowly as things come out toward a commodity scenario, right? And so you have to kind of find new ways to stand out and innovate. And so I think for a long time, what banks have been doing, right, is sort of chasing the digital world a little bit as they should, right? So consumers have these streamlined, efficient digital experiences in every aspect of their lives. And so they come to expect that from banks and from everything else. And so what banks, I think, have effectively done is start to build this wrapper around our existing financial products and create that personalization, create that planning, and make that more cohesive digital experience. And I think one of the trends I'm very excited about is how do we build on that, right? How do we go even further and think about what are these potential incremental or tangible things that live adjacent to banking, right? Where we can add further services and products beyond that complement the core.
But one of the challenges I see with this is where banks have gotten it wrong historically. Think of the promise of PFM. Right? We're all old enough here to talk about it. It's like, I remember Yodlee and PFM and this account aggregation. Banks were going to be like, you can aggregate your other accounts. And because they're all in your US Bank account, suddenly that is going to give us primacy of what we're doing. But I would say, we see this repeatedly, and we're seeing it again, which we'll get to around kind of the AI revolution. Aggregation and, pulling it together doesn't always give you primacy. What's changed this time, Drew?
That is a great question. I think a big part of it is you want to create, to go to the topic of the podcast today, I think you want to solve a real problem, not necessarily just create a feature or a product for the sake of creating it. Which can be a really hard thing to do. And I think you're also a little bit at the mercy of how advanced that tech is, right? And so you're a little bit trying to balance, how much can we actually accomplish with PFM, but how much do people actually want this? And so I think one of the luxuries we have on the FinTech Acceleration team is that we get to work with great founders and FinTech entrepreneurs who are out there testing these markets live in real time. And these companies are living and dying on whether or not there's product market fit. And so we kind of already have a lot of that problem solved sometimes when we look to the FinTech market to see what are consumers actually using and what's actually being successful in the market.
Isn't that interesting? I think it's so interesting.
Yes,
I
please.
think it's so interesting to think about the evolution of financial institutions in general. And, and it's kind of great that we're not in like the Green Gots world of, okay, we got to go into the sub basement, and like banks are really getting pushed into and continue to get pushed into innovation, evolution because of neos and challengers that are aggravating because they're taking risks that our banks would never take, but they also push them into places that they probably wouldn't have gone into without that type of pressure. And it's really kind of an awesome experience of being able to see how that particular evolution of the product works in the industry, in the real world, so that by the time that the banks want to get to it, they know if it's going to work or not.
Well, Marcy, let's pull on that thread for a second, because you also come from a very traditional world. And I don't know if you know this. We both share a history. And I was at Deluxe. You were at Harlan Clark, right? Like we sold paper.
We're not supposed to like each other.
No, that was long ago.
Years and years.
Yes, but we were selling paper products into banks, right? And then you have a history of you were helping solve problems that banks are very familiar with, like getting your direct deposit switched. But now you sit outside of the bank and are solving problems that
we created a solution for instead of
right. And so let's talk about the customer and how they're thinking about it. Because I think the bank, a common theme on Breaking Banks within LA Labs is I talk about banks are used to being the center of money. And for customers, the bank is at the edge of life, right? So the edge of money. You're coming at the edge. Why don't you explain a little bit about how Carefull views the world and the problem to be solved?
Yeah. So we've got two really great, this is a great question. We have two really good founders. One comes from, Max Goldman comes from the, Google tech background. And then we've got Todd Rovak, who comes from a consulting. He's been working with financial institutions for a long time. And he just kept hitting up against the question of what can we do for new accounts? What can we do for the younger generations? What can we do? And so he found himself continuing to try to solve problems for consumers that the financial institutions were trying to pull in as new consumers. And the fact that, the 60 plus generation has about 2/3 of the total deposits in the financial institution. And there just hasn't been a lot of focus on how to protect, how to safeguard, how to comfort, how to keep that generation. And so he wanted to pivot to that. So he's really chasing something that needed to be solved. How do we protect those customers so that when they run into a situation that feels like a scam, they know how to test for that? They have a call center that they can call with us to say, hey, this just happened. What does that mean? And then they get and we do not have KPIs on the length of the calls.
Okay.
Because we know that those are going to be long calls where you're going to leave with a customer going, okay, I have figured out all the things that I needed to figure out and I feel safe now and I did the right thing and I didn't have to call my son to talk me through that. So we're really trying to bring to the market a product that desperately is needed by a population that has a lot to protect. And I think that's been an interesting journey because we're bringing something that says this is needed versus like the skunk works type of conversation of working with an FI and saying, oh, you want this? We'll figure that out. We're pushing more than we're pulling.
So on the topic of KPIs, two great words, protection and safe, come in. Drew, how do you bring that into U.S. Bank and the broader enterprise? Those are not KPIs, or I think even words outside of maybe the brand group that get put around. But that's a huge value.
Yeah, certainly. I mean, I think we go back to first principles. You think, what is a bank, right? It's security and it's infrastructure, but like most of all, it's trust. And so I think it's an incredibly difficult question. I think you have to live it every day. I think you need to inject that safety, inject that security, inject that trust into all the things you're doing. I do think there's more tangible things, obviously, and there's fintechs out there, such as Carefull and some other fintechs that we've been chatting with in the market recently that are coming up with great, fraud fighting, scam fighting type solutions. So I think it's a little bit of both. I think it's inject that consumer trust into everything we're doing, know that the bank is going to have your back, but also find these partners that are doing more tangible things to fight, kind of fight fire with fire, whether it's fight AI with AI or to go out and actually, stop some of these bad things that are happening and do more tangible work to help our clients.
Is it fair to say that loans, deposits, online banking, mobile banking, even FDIC insurance is actually just infrastructure at this point? Yeah. Like it exists only below the waterline of relevance from a bank perspective?
I think US Bank would say it's very important to have high quality banking products, right? And so I think, I certainly think that's all still extremely relevant, right? I think having great products and a great base and a great infrastructure, right? That's still the core of the business. And you can't let that slip at all. But I do agree from a differentiation standpoint, that's not enough always to attract and retain customers. And so as we go forward, it's sort of like, how do we stay current? How do we innovate without letting any of the core stuff slip, without stopping being just a great bank? And so I think there's a symbiotic model, I think, that we can approach through these fintech partnerships, so we can get that differentiation and also retain that core, and they can kind of play together, right? So we can use that banking core to make the business model work and support customers, and then we can use some of these extra things to differentiate.
And Marcy, are other FIs that you call on, broadly banks and credit unions, understanding the necessity of value, right? This is not window dressing you're putting on products, hoping that you can pull people in. Like there has to be real value. Is that mind shift really happening?
I think it's happening. Conversations that I've had earlier this week, the FI I was talking about the fact that the life cycle is incredibly important of the consumer and how to meet them where they are. And I think that's such a shift, in opposed to just thinking about, all right, this is the checking product, and that means that we offer these 3 levels, and it doesn't matter, what your age is. It doesn't matter. It matters where your balance is always, but it doesn't matter what else is going on necessarily in your life, other than when they can try to figure out ways to upsell, cross-sell. Like, okay, now look, this is it. Now it's more of a changed conversation of, instead of when do I sell a different product, it's more of how do I make sure that I truly do meet them where they're at, and that all the way through the organization, from the digital experience down to the branch, we're asking the right questions to understand the end consumer. It's a big journey on how to get there, and I think there's going to be a lot of test and learns along the way, but just the shift in dialogue is impressive.
The comment you made earlier is just ringing in my head about that when folks at Carefull, when your customers call into the call center, there's no KPI on the length of those calls.
Trust me, I know this when my mother calls.
Jason calls in just to have a chat. He's putting up your bill.
Oh, we get that, and that's fine. That's why we're there.
But I mean, that is powerful, right? And that is it sounds so simple, but I think if we can get to that point more often, right, and which is tough, right? It's a competitive world out there, and you need, call centers are, for example, are expensive to operate, but if we can get to a point where we're building something that delights folks so much that those, that incremental bit of cost doesn't matter, right? Where there's so much value to go around, but that's not an issue. I think that's a beautiful place to be. And I think it's a lot of work to get there. It's these carefully designed partnerships. I think it's a strong, trustworthy brand. But that's the world we want to live in, right? Yeah. That's
and you don't never, it's always a continuous journey, because you're going to get to a place where this is much better than it was before, but there's always someplace else to be going. And how do we continue to explore that together, especially between fintechs and traditional financial institutions? How do we bring fresh ideas to let you play while staying very stable and secure and risk adverse?
I love that phrase, enough value to go around, that it is not a game where there's winners and losers, that if we create value for customers, there's enough for the bank, enough for the partner. How does US Bank think broadly, given in the Fintech Acceleration Program, you lean heavily on partnership? How do you go through that build versus partner mentality in decision matrix?
It's probably one of the most complex questions that we have to answer, I think, is in any given situation, build versus buy, right? And really build versus partner versus buy, right? But we'll call it build versus buy. And I think it's very use case dependent. I think it comes down to what do we want the customer experience to be like? How much control do we feel like we need to exert over that to make sure the customer has a top-notch experience? Where's the fintech at? The specific partner and maturity. How core is the function to what we're doing, right? If we're ripping and replacing a very, very critical piece of security technology, right? There's a lot of fantastic vendors out there, right? So there's a good chance we use a vendor, but we're probably going to customize some stuff with it, et cetera. So I think, it's very use case dependent. I guess, Marcy, how have you guys seen that with clients? And
I love the question of, and I think it's interesting for interactions with financial institutions to take them down the path of what are you looking at for building versus buying. And as a vendor, truly, I think that is actually kind of a test of your worth, because if you're not comfortable asking the financial institution to go through, you should look at building also, so that when you decide that you want to acquire this service from us, why it should be through us. That's a really great place to start a relationship. And it lets those that are making the decision inside of the financial institution defend easily why they've decided to allocate this funding towards that product. Because we looked at how they were built, and we knew that we were not going to be able to create a service that was nearly as good at what they're doing, and that they're the expert in that. And we don't want to be. The financial institution doesn't want to be the expert in all things at all times. So I think it's a valuable question for vendors to be asking if they know that they cannot be built inside of the FI.
Yeah. I think, honestly, going back to the luxury of being able to do what we do in the fintech team and work with B2B fintechs is that, especially in the venture-backed world, right, you have these teams of brilliant people with a great amount of funding that have been obsessing over a specific problem in a specific space for 100 hours a week for X number of months or years. And so I think it puts you in a position where you're very likely to find these instances of this partner is doing something way better than we could build it. Or maybe we could build that, but it's going to take us 15 years or 5 years or what have you, and more money. And the amount of de-risking and testing that needs to happen is just not something that we're going to be able to keep under our roof for that long. So I think it's in terms of broad enterprise use cases, that's a different conversation every time. But I think there's so many great instances. Again, the reason our team exists, where there is that real value out there of the partnership, just makes so much more sense.
Mm-hmm.
Well, ROI always comes up. And I think the challenge is I comes before the R. And
I haven't heard that before. I like that.
And I actually don't think I've ever said that. I don't think I've ever said that before. So think the coffee at 5 a.m. But it becomes really easy to say, let's just forego, let's kick the can down the road and not do this now. Avoid the we don't get the return, but let's avoid the investment. So in the short term, we're neutral at best. For both of you, when we look back 5 years from now, because so much is changing so rapidly within financial services, from the infrastructure to the number of startups that are entering, to new charters, what's going to be obvious around this idea of, banking on values as opposed to the underlying products that isn't obvious today?
Well, it's definitely easier to say no than it is to say yes. And so I think that it's a fun evolution for the FIs. I use that sarcastically, but to be able to have the kind of position that Drew has of how do we continue to pursue what is fresh and new and that will make a difference for our end consumer whilst keeping the credibility of the financial institution. That's a tough thing to balance. So 5 years from now, I think there will definitely be some significant differences in digital experience and depth of product. Will it be shockingly different from today? I don't know.
Yeah. No, I like that. I think, to Marcy's point, that to a degree, you don't want your bake to move too fast. You do.
Yeah.
You do.
Yeah. But as the end consumer.
But you want them to move.
Yeah.
You want them to move, right? And so it's like, how do you strike that balance? And I think, obviously, fintech partnerships, one of my theses on how that is going to happen. I think also strong leadership at the bank, and we're fortunate to have some really fantastic leaders we work with that are willing to look at, we help them build the business case, we find the right startups, we put the the situation in front of them, but they're able to kind of take a chance. I wouldn't even say necessarily take a risk, and there's a risk to it, right? But they're basically saying, I believe in the story. This is worth it. We're going to give it a try, and we're going to make this happen. And so I think there's a trust there, right, between the ecosystem, between the bank leaders, between our team and the leaders. And I think as you see those successes and as you build the process and build the practice better, I think it's easier for more folks to say yes. But a lot of times I think it's just strong leadership and being willing to try something out for the customer in a way that's, careful and intended. Yeah. That's careful and smart.
Careful with one L.
Careful with one L.
I do think, too, that it would be just thinking through evolution of changes in general. There wasn't innovation teams like your group for a long time. That's still relatively new-ish, 5-7 years or so. And so, all of that's heading there. And now as a vendor, I have somebody to call that will talk to me and help me understand if there's going to be a fit and if this is something we could pursue, because the product folks are always barely keeping their head above the water, just trying to keep the train on the tracks. So I think that's a great evolution. And then I would love to see, if I was in control of the world, which sadly I'm not. I would love to see our financial institutions get to a place where they have like the skunk works, and not that we're going to build it ourselves, but more of we have this small team that works with financial institutions, or that works with fintechs, that lets you test in a real environment without having to take on the intel. Like, it should be we still get to A/B test this. We get to get it out with a real population. It's a full-blown product. It's not a, POC that's dressed up as something else, but you don't get to actually test it like that. And like being able to and then you're making decisions off of actual data because you got to experience this product with real consumers, and then you get to walk away if you don't like it. Like that, I would love to see us get to that type of place where you can actually truly get it out there.
Well, I think that's one of the biggest changes we've seen is in this last 5 to 7 years, the expectation that these innovation teams do more than actually go meet with startups and do POCs. They're actually expected to produce results themselves. Mm-hmm. Final question. Do you think we're headed to a world where the customers are going to expect the bank to prove to them, the fintech partner to prove to them the results? Are we moving towards an outcomes-based world of banking?
Ooh.
I think yes. I think I'm very optimistic about what the future looks like. Hopefully we all are. And I think, I think in general, customers are always fairly discerning, right? And I think at least over time, and you have the whole adoption cycle, and so different customers treat it differently. But I think overall, right, you don't want to just window dress a bunch of products. That might work a short period of time for a certain group of customers. But I think if you're creating real value, solving real problems, when we think about like, how do you move banks from the edge of money to more central to folks' lives? That doesn't necessarily mean that you're going to go spend every day at your bank, right? But if your bank can handle more of the things that you don't want to be doing in your life, I think banks do this great for small businesses today, right? There's a lot of tools that have come out in the last 5 years that is like, you want to run your business. You don't want to think about all this stuff. Let's do it for you. How do we bring that to the consumer, right? And so, go be a human. We'll handle the ones and zeros in more ways than we do today. You can go be a human. And I think as that gains traction, I think customers will love it. I think to go back to your point, those outcomes, I think will be more powerful than any given feature or product.
And I would just say that I think end consumers are still making the primary decision on convenience. It's still branch location, things like that. But they know how easy it is to change. And that's different. And so you have to, as a financial institution, figure out all the different ways that you keep them once they make that simple decision in the beginning. If there's a U.S. bank on the corner and I just moved here, so I'm going to go open up my checking account and ask about a loan. Now it's all the different ways that financial institution continues to prove that the customer made the right choice. And they are educated enough at this point to know that they can go someplace else if they don't like how they're receiving this information or this product. I think that's the constant challenge, and a good challenge. We want it to be that level of a product.
But sometimes the convenience is the value. Yeah, speaking from my point of view as a Carefull customer, right? Like the switch, the attraction to me is being able to leverage the fact that my parents do have Carefull available and a trusted source. My mom wouldn't trust it as much without a bank behind it, right? Like, does not trust the internet, woman of a certain age. But it's
smart these days.
Yeah. Like the number of texts I still get is
They've
this
been
a
telling
scam?
us it for years, and now,
Mom, if you think it might be a scam, just assume it's a scam.
yeah.
Is it a scam? Yep.
But the value, right? The convenience for me is that it's there, that's easy, and things are linked, right? Like, so if we can make value more convenient, as opposed to physical locations, to me, that shortens the gap to the outcome.
100%.
For sure.
So in a new world where we move towards values-based banking and outcome-based banking, I really appreciate both of your perspectives.
Thanks for having us.
Really appreciate having us.
That's it for another week of the world's #1 fintech podcast and radio show, Breaking Banks. This episode was produced by our US-based production team, including producer Elizabeth Severance, audio engineer Kevin Hersham. If you like this episode, don't forget to tweet it out or post it on your favorite social media, or leave us a 5-star review on iTunes, Google Podcasts, Facebook, or wherever it is that you listen to our show. Those actions help other people find our podcast, and in return, that helps us build an audience that can be supported by sponsorship so we can continue to provide you with our award-winning content every week. Thanks again for joining us. We'll see you on Breaking Banks next week.